going to go ahead and get started. I am pleased to introduce GDEV. They flew in all the way from Cyprus, and we appreciate that. So a good opportunity to to meet the management team here. I do have an outperform rating on the company. This is kind of keeping in our theme of our gaming company. So it's a very attractive growth industry. This is a global company. And so with that, I believe Roman's going to start us off. So I'll turn it over to Roman.
Yeah, thank you, Michael. So, hello everyone. Thank you for coming. So, yes, my name is Roman. I'm Chief Corporate Development Officer at GDEV. So, we are a gaming holding company based in Cyprus, and we own studios who develop their own franchises and develop the games and market them on the different platforms. So as of now, we own 4 studios which develop different games for their own audiences. So it can be like teenagers, it can be grown-up people, and like altogether, these games they entertain on average from 10 to 15 million people every month. So. I believe our most famous game is Hero Wars, the advertisement of which you may have seen on your Facebook, Instagram, or whatsoever, because we are really active in digital advertisement. So we show on average 5 billion advertisements every month, so that we reach the very wide audience all across the world. And we are well diversified across platforms, like 60% is mobile and 40% is PC. Geography, with US being our largest geography, 1/3 approximately of money comes from there. But we're also very strong in Europe, we're strong in Asia, countries like Japan, South Korea, Taiwan. And we're diversified across the titles as well, with the largest title taking approximately half of total revenue. And we are a sizable business, like with the revenue of approximately $500 million. The EBITDA was, as of 2023, approximately 10%, which may sound a little bit low, but that was purely because we turned back into the investment cycle and we invested heavily in marketing and user acquisition. Like the growth was 50% year over year. So our business was always self-funded, so we never get any debt. So we are having a rich cash generation, and the last year we ended with approximately $170 million of cash on hand. So yeah, and if you look on the model, like what is gaming, the live service games, so basically you have 2 key functions. So the first, you need to develop the product which can entertain, monetize, and retain people for as long as possible, and we are really good at it. So on average, people in our games, they live for approximately 2.5 years. And on another side, there is a marketing. So you need to bring users as cheap as possible into your game. And we again quite successful there, spending more than $200 million in digital advertisement every year. So and the difference between this cost of user and LTV which you get from the users you acquire is basically your income, which translates almost fully into the cash for our company. Yeah, in terms of strategy, we have 4 studios. Each of those is working on their one second. Yeah, so they are working on their own genres. They're all working on their own games, but we are also actively investing in other studios with the more like early stage products, and we help them to achieve great results with their game, because we have a lot of data, we have a lot of knowledge, and also the funds which can help them to market their game to the audience. And I think last but not the least, which I wanted to touch, is that the gaming industry is the largest entertainment industry in the world. So it is around $200 billion annually, and it is larger than music, cinema, and books altogether. Like globally, people spend on games lots of money. Yeah, Michael.
So are you ready? Okay. Yeah. Well, I have a couple of questions. I was wondering if you can, obviously one of the interesting attributes of the company, and I obviously just began following you recently, is that you've been exceeding expectations consistently, both particularly on the adjusted EBITDA line. And some of that has to do with your marketing. I think you've kind of shifted around marketing, around being a lot more efficient in terms of your, gaining users. I was wondering if you could just talk a little bit about your marketing efforts, your strategic efforts around that, and just kind of talk a little bit about the flexibility that the company has to spend in cohorts where you're seeing a return.
Okay, yeah, I can take it if I may. My name is Alexander. I'm a Chief Financial Officer of the company. I mean, yes, indeed, we've seen a lot of improvement in respect to the cohorts last year, and probably let's make a step back. So what really the entire gaming market kind of went through over the past couple of years was a really difficult time in 2022, because like many things come into just together into 1 year. It's post-COVID, all times of the effects. So the people were spending too much time online and just decreased in 2022. Then all those regulatory matters in respect of Apple, like IDFA, so actually the ability of the advertisers to target the users, and but also the, to a certain extent, high inflation and the disposable incomes also contributed to the market slowing down. And so what really happened? We usually would really only invest in something what we believe gonna pay off. We have enormous amount of data, and whenever we really scale the marketing, we just understand very well. Like, so we channel to spend the marketing in which country, and based on certain characteristic and behavior of the users, would really understand very well, I mean, how the cohort would behave. In 2022, we scaled that substantially because we really felt that, I mean, the marketing was not as efficient. In 2023, to a certain extent as well. What we said, again, it's not specific to our company. That's specific to the majority of the gaming companies that are dependent on this type of the marketing. In 24, the market started to stabilize. So the large companies kind of accepted this type of new reality in terms of the ability to target the advertisers, and actually we started to diversify the channels. So first of all, we started to spend much more on the brand marketing, not only the performance based, to basically like increase substantially the visibility of the brand and the visibility of the games as such. And we also started to play with like new channels. I mean, historically, and then we still can spend a lot through Google, but we started to diversify through kind of new era types of the channels. And it's like, I mean, some of the companies, the vast majority of those companies are US-based companies, some of them are in Israel, and they are offering different types of like instruments, analytical tools, just to target the consumers. And so that's all together. So it's really being a lot that we developed internally. We collected kind of new sets of data. We just crunched the data to understand what was and what was not. But also the market stabilized. And we really were in a position to scale the marketing in 2024 on the back of the IRR of this spend kind of increasing. That's a very good start. I mean, I would call it kind of a new cycle after 2022 and 2023. And it's again, we are benefiting a lot from that, but it's general trend in the market. So it's like new cycle, we believe, starts now in the gaming.
You have this huge cash position, and obviously with your trajectory of your adjusted EBITDA and your cash flow that you can have 200 million in cash in just a couple of years. And I was just wondering if you can just kind of explain to the community here that you have this ATM, and if you want to just chat a little bit about the ATM and how you're using, your treasury stock and so forth, and what that might mean.
Yeah.
So if you want to
Yeah, thank you for the question. So basically, we went public on NASDAQ in 2021, and that was via SPAC, which was a very popular thing at that time. But as a result, we had all that negative legacy, like low liquidity and low free float. So because basically very little amount of stock went into the market. So with the ATM, the idea, usually companies use ATM to fund themselves as they are like not profitable or whatever. So for us, ATM is an opportunity to increase liquidity, to get some knowledge from investors, to get stock in front of the investors, and to make the quality of stock better. Because why we need a higher quality stock? Because we want to continue growing inorganically, like invest in those money into the new studios. And we need high quality stock in order to motivate those people with the stock. Because when we take the new team inside GDEV and they're developing some kind of game, their result influences a lot the price performance and stock performance of the whole company. So that's why we need that to happen. So yeah, we are doing a lot in these regards, because that is not just to sell some stock or to get money. That is basically the very strategic and long-term thinking of us in order to make the stock like high quality and attractive for our new partners.
Just probably a couple of words on the cash. Yeah, it's quite a pile on the cash of a cash on the balance sheet. So it's but look, we're still like consider ourselves a startup company, though the size is already large enough. Just we don't wanna distribute the cash, wanna grow more, and our goal is basically to spend all of that cash just with a good IRR for the future growth, both organically and inorganically.
Yeah,
We're just still too young to distribute it.
Yeah, and do you want to talk a little bit about acquisitions and prospects for acquisitions?
Yeah,
and your strategy.
Sure, I can tell. So basically the idea of going public back in 2021 was to become one of the consolidators in the space. So because in gaming there are a lot of like small studios and they develop their own games, and each game is basically a very own world. Like, so it's not so easy to copy. You need to really know your audience. You need to find these little things which attract people and they make them stay inside. So it's a very valuable experience when the people can really create something which is loved by the audience who stay inside the game. And yeah, so we see that right now the market is stabilizing in a way, because in 2020-21 it was crazy in terms of M&A. Deals were being announced like every week, I don't know, 10, 20 deals, and the multiples were a little bit insane at that time. So, but right now we see a very good opportunity for buyers like ours with the cash, because getting financing for the small teams who have like a small product on the early stage is getting quite challenging. And we, as you mentioned correctly, have a lot of cash and we have appetite for growth, because we can take them inside and we can give them all the instruments we have inside. We can take all the boring administrative work on ourselves, so that team is only concentrates on the creative process, like taking the game and creating it and maintaining it and taking it to the market. So yeah, and we right now are having like some very early stage teams at GDEV, so who are having prototype and right now developing, not generating revenue, but showing some very promising metrics like in terms of retention and so on. But we also see some bigger targets out there in the markets who have built their game for the last 2 years. And we believe if we collaborate with them, we can achieve great results together. Because again, this market, entertainment, is a market of ideal competition, because any company from any part of the world, they can create an app, upload it to App Store and Google Play and show it to the market. Like, it doesn't matter where you are, in US, in Cyprus, in Australia, whatever. So, and we really see a lot of talent doing that and getting a really good traction. Yes, please.
Thank you for your presentation. It's very interesting. What your new marketing campaigns, has it driven down customer acquisition cost, and if so, by how much?
I'd say yes. We've driven down the consumer acquisition cost. We are not disclosing the data, but it's like you can easily say like 10-20%. But it's also it's the equation. It's the both sides. So it's LTV and consumer acquisition cost. And when we talk about the consumer acquisition cost, it's actually. So unfortunately, our business is complicated enough. So it's a lot being done internally. So basically, it's as simple as that. You have to be able to target those users who are gonna play. It's simple as that. And it's like a hell of a bunch of things come into play, like geo, social demo, and so on. You have to really be able to kind of use your statistics, your databases to apply to kind of new channel. And second, just the market. The market kind of, which was absolutely insane, like in a post-COVID environment, but also when the kind of large companies trying to really accommodate to these new DFA things, now it's kind of stabilized. So what we see, because we've been out there in this market since 2012. Now the market, it's tough. It's it's a lot of competition, but it's at least from the standpoint of predictability, it's back to pre-COVID. So we can really predict the cohorts, and it's not only about the price of the consumer. Obviously, it's very nice to get the kind of the consumer acquisition kind of be lower than it was, but also to be predictable, so that the cohorts of the users, I mean, they are like from a behavior point of view and the players' point of view are like normal in a way, normal business we used to have like in 19.
So do you sell the average term, the membership length that you're selling access to? What's the average time length?
Actually the public data. Blended average for our games is 28 months.
So do you have liabilities on your balance sheet for filling
Sure.
the
Yeah.
membership?
Exactly. For this type of liability. Yeah. It's not really liability that is settled in cash. It's our kind of liability to maintain the game in a way. Yeah.
And you might want to talk a little bit about the marketing effort, but maybe to focus on player retention and that sort of thing, and maybe even extending the average life of those paying users.
Yeah, I can cover. So yes, the retention is a very important metric in this business because basically, even when we do some prototypes in the early games, the first metric which we look at is the retention of day one. So basically, if you create something and on the second day, I don't know, 2% of users come back, nobody needs that game, so you don't need to maintain it. So 40% is basically the metric which is okay for the first day retention, which is higher, the higher the better. So looking on our existing games, so we see that many of those are already quite old in a way. So for example, Hero Wars is 2016, Pixel Gun 3D is 2012, as I remember, it was launched. And these games, they develop a lot. So it's a live service game, so every month you maintain it, but sometimes you need a deeper change in some of the elements. For example, onboarding. So right now, for example, Team of Hero Wars, they are working a lot on the first, let's say, 3 days of gameplay in order to retain you, engage you much deeper. And if we manage to convert a higher amount of players into players of the later stage, so it brings massive results going forward because the game is already very mature. It has lots of mechanics. The depth of monetization is really high. So basically, any percentage points of increase in retention brings a multiplicative effect on the whole game. So really, right now, many teams of the older games, their focus is to improving this retention. Not that it's bad, but you can improve it by just making the game fresher. And because the consumer preferences, they always change. So it's not like you can do something and forget about it and it works forever. So it doesn't work like that.
Bookings have been coming down in the last couple of quarters, but you expect that to turn and move more positive. Can you just explain and talk a little bit about the significance of that as well?
Yeah, so that was our decision not to focus on the very short-term results because we could continue doing the same as we were doing and having more or less plus 2% of growth in bookings. But right now the team is very much focused on the deeper changes inside the game. So and when we see the good results in these first sessions, we can boost marketing and get much better results. So we would spend those money much more efficient in a way. So and we will get longer cohorts with higher returns.
And bookings is a very clear revenue prospect for you guys, so that's why it's so important to monitor that.
It's like a sales, I would say. So with the amount of money people paid inside the game for the period.
I saw a few questions on that. Yeah.
Thank you so much. I appreciate it. I want to go back to the idea of acquisition. What are some key indicators that you look for when you're looking to acquire some of these prospective studios? I mean, you guys do mention that you have some excess cash, so I just want to get a better picture of what are some aspects that you're looking for when you are looking for that next game that's going to up your game.
Yeah, look, it certainly would depend on the kind of what the company is. I mean, if it's kind of a young company, they might only have a prototype, but still can be having a very good prototype. In this case, we only would concentrate on retention. What Roman says, so of course, it would be for certain games. It would be just too premature to really think about the monetization, revenues, and so on. And we have such enormous amount of data that really based on like day 1 or day 7 retention and certain metrics like the session length and so on, we can kind of predict quite good. I mean, what the retention for that game gonna be for a year, for example.
Can I ask a follow-up to that, please? So, with all that being said, do you notice any genres that could potentially be more synergistic to your ecosystem, like that can work well with what you already have? And then with that, like, do you forecast any genres to be, more appealing in terms of retention?
Yeah, I can cover that. So our right now, for example, Hero Wars is a mid-core game. So and it has a very, let's say, long life of the user, and we can buy users which can pay back its investment in year or even year and a half, and still earn a lot of money on that cohort. So right now we are looking on the, let's say, shorter payback, because the attention span of people is not like growing, so it's becoming less. So and we see the genres which are called like hybrid casual or light core games, so which offer also a depth and monetization but wider appeal, and you can just turn back money, for example, not in 1 year but in 6 months, for example, and then you get the profit.
Thank you.
So, hopefully not too off topic of a question. I actually grew up playing Pixel Gun, so I think I can speak to this. A lot of the player base from that game in particular has mentioned that it's not what it used to be, because it's become a very pay-to-win game, if you know what I'm talking about.
Yeah.
And where, you just got to keep dumping money in to keep doing well in the game. I was wondering if you think that would be a good strategy to go with forward, is to just get as much money out of those people who are willing to keep paying, or if you consider switching to a different method,
Yeah.
either by running ads or by selling purely cosmetic items instead of.
That's a good question, because really Pixel Gun is a great brand, but the previous owners, because we bought it only 2 years ago, they were doing this very deep monetization and like pay to win, like trying to get as much money from people and not giving too much in exchange. But we, for example, launched it on Steam, and it was a great success. Like the day 1, the online was in top 20 games among all games. And right now we are, let's say, working on the, let's put it like Pixel Gun 2 in a way, so which would take all the best from the brand, the visuals, the feeling, the like speed of gaming and whatever, but put a much fresher look on the gameplay just to make it wider appeal and take back some of the older players like you are, and take back some younger audience in it, because the game, this game, we believe, has a great potential and a great brand.
Can you talk about your stock performance? Over the better part of the last 6 months, your stock is up 10%, but you had a dramatic spike in November.
Yeah.
And then correspondingly came back down. Can you talk about that quickly?
Yeah, sure. Yeah, as I talked previously, like our free float effective is quite low, and most of that is right now held in, as we believe, retail, among retail investors, which tend more to be more like speculative and with a higher like ups and downs. And that is exactly the situation which we would like to fix with the ATM, to offer more stock to the institutional investors who could support the stock. If the price goes down, they buy because it's cheap right now. When it goes up, so they can sell a portion of that. So there was no specific reason for that. So and really it is right now, yes, quite volatile, and that is on the top of the agenda of the management and board to fix that issue.
You had a nice pickup in volume during that
Yes.
period leading up to it, and it's been holding pretty steady. So obviously there's more awareness now.
Yeah, so
Do you
the
have a digital marketing plan, or is there any social outreach for the companies from the stock point of view?
yes, definitely. So in the beginning of the year, the stock liquidity was like $5,000 a day. So right now it is 200,000, which is a great uplift, but still not enough. So and that is basically why we are coming from like 10,000 miles away from here to this wonderful conference to talk, to see the investors who can support us. Okay.
Any other questions?
Thank you.
All right. Thank you
Well,
very much.
Thanks a lot. Thank you.
With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then Channel Check truly is your choice. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series luncheons and to be part of the preeminent annual Small and Microcap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.